Hey everybody, Ben Nelson, the everyday real estate investor here. I am coming at you with another episode of the podcast. Thanks again for tuning in to the show. I am super excited to continue to bring awesome guests that are out there doing the thing and seeing success in real estate investing and sharing their stories. So I'm doing that again today. I've got an awesome guest. Today we've got Justin Moy, managing partner of President's Club Investors. Justin, thanks so much for being on the show. I appreciate it.
Ben, man, I'm excited to be here. I know we've talked back and forth a little bit to make this happen. Excited to come on and talk to the audience.
Awesome. Well, I always start out with kind of giving people some context as far as, where we can talk about what you're doing. We'll get there, but where did you come from? Like, give us a little bit about your background. Tell us how what you were doing, what got you first interested in real estate investing, and then kind of how you made that transition.
Yeah, so I got pretty lucky in that when I was growing up, I was looking for that very first office job, like an internship, because that's the path that I was told was really important. Go to college and get some experience and kind of climb that corporate ladder. And maybe that's a good idea, or maybe it's not for certain people. But I was looking for that just very first internship. I knew I wanted to get an office job. I wanted like weekends off, right? Because at that time I was working at grocery stores and retail stores and stuff like that. And it just so happened that that first job was in a real estate office. So I worked at a commercial real estate company called Cassidy Turley, and it's been bought and sold several times since then. I don't think they exist anymore. I think they got bought up by one of the big ones. But I was a 17-year-old kid, and I absolutely loved that field. I knew nothing about real estate or real estate sales. There was one guy in there who sold warehouses. I never even thought about the prospect of selling or buying or owning warehouses. I had no idea, how that business even comes to become. But I really enjoyed the energy. I loved the vibe of the office. I loved seeing people succeed and seeing the wins and seeing the shout outs. And it really stuck to me. So that was 17 years old. And when I was 18, maybe the couple days or so after I turned 18, I got my real estate license. And it seemed like a natural progression for me. And so I started selling single family homes in the Bay Area of California. And I was really not good at it. I really bombed it for the first about 6 months. I closed no sales. And being in the brokerage field, if you close no sales, that's really bad. You don't make any money.
Right.
So,
Yeah.
I'm 6 months, and thankfully I'm living with my parents. It's not a huge deal, but I'm 6 months in and I've made $0. And I was working harder than I'd ever worked before. And I was actually getting ready to quit that job. I was in the office. I would cold call a ton. All day, every day, I was looking for business. And it was one day, it was about the 6 month mark, almost exactly. And it was 7 p.m. at night in the office. And I remember taking my headset off, and I had that little dent in the top of my head, like you have when you cold call for a couple hours. And I decided I can't do this anymore. I'm going to leave. I'll just walk out. They'll just never see from me again. They'll get the hint. And I saw one more lead come up on our little dashboard, and decided I would make one more cold call, and that would be it. Called that person up. Very first person to ever say yes to a listing appointment with me ever. And so much so that I thought it was a prank. I thought one of my friends was pulling a prank on me. So ended up going to her house, listing her home. That was my very first listing. She bought her next home with me. They closed on the same day, and that was a $60,000 net commission to me after taxes
Wow.
and fees and everything. And this was the
So
Bay Area, right?
that's awesome. So I want to pause right there just from a mindset perspective of,
Yeah.
we people see other people's success and, oh man, look at them. They had it so easy, and they don't see the
Mhm.
work behind it, right?
Yeah.
Number one. Number two, so many people quit. You just admitted, right? I was this close to quitting, and so
Yeah.
many people get there and they do quit, right? They don't make that one last call. They don't knock on that one last door. They don't, attempt to do one more deal. They just, they're about to turn the corner. You put all of this effort
Mhm.
into being successful, and then you quit right before you are. And so
Yeah.
I just want to point that out because I think that's super important where a lot of people give up right before they're about to see success. And it's just like,
Mhm.
keep pushing and keep making, that effort. You're almost there, right?
Yeah, and that was a huge point to me because it really taught me to buy into the process and not the outcome. Because when you're brand new, you're
Yeah.
chasing this outcome, you think you should be getting sales, you're kind of told the industry averages, which may or may not apply to you. I think at the time it was like, hey, if you ask 20 people if they want to sell their home. You'll get a listing a month or whatever they told me to sell me to to go into the
Yeah.
field. For me, it wasn't that way. It took me 6 months with no sales. And then I got the single largest check that I'd really ever gotten right after that. And ever since then, it got a lot easier after that, but it didn't get easier because I just closed my first sale. It got easier because I had a pipeline now. And all that
Hmm.
work that I did 6 months ago was finally starting to come to fruition now. And then that really sold me. Now, the biggest piece of advice there was just to always trust the process, work the process, and the outcome will follow. If you put together an effective process, don't worry about when you'll achieve what you deserve. You're going to get there when you put in enough work. So that was a
Yep.
really big win for me.
Yep.
And
That's
then
great.
after that, I continue to go on into President's Club awards there and be top producing in the office. And it really set this stage of my life where now I just don't give up. You can't give up. Because like you said, you're always right there. And now whenever I'm thinking of quitting something or stopping something, and even if it's as simple as like my own podcast, right? Passive Real Estate Strategies, I've thought about hanging up the mic on that so many times, and every time I'm about to, somebody calls me or reaches out and says, "Man, I love your podcast, and I'm thinking of investing. Can you help me out?" It just works that way. So it
Yeah.
was a really, really big shift, and it really set the stage for the rest of my life.
Yeah. That's awesome. Lots and lots of lessons there, right?
Yeah.
So that's a great. I appreciate that background. So great. So started out really young, dove, right into real estate, kind of a little bit by fortune and just kind of starting out with a job that's
Mhm.
in the industry, and then tell us a little bit about what that. So you're not a real estate broker now, right? So tell us
I'm
a
not.
little bit
No.
about that transition from being a real estate broker to turning into an investor, and then we can talk a
Mhm.
little bit about where that led and what you're doing now.
Yeah. So the biggest difference from selling to owning was really the difference between transactionally rich and really wealthy. And I knew when I was in my role, to be a top producing salesperson in any field, it takes a ton of work, not just on the actual day to day of what you have to do, but on getting better, the education, practicing, rehearsing, doing your scripts, role playing. I mean, it's such a laundry list of things you've got to do. And you can make great, great money. But I realized again, I was transactionally rich. I closed a deal, I was on to the next. I closed a deal, I was on to the next. Every month I started back at zero. And even in just a few years, I started to realize, man, I'm making great money. I love the money I'm making. I love the lifestyle I've created for myself, but I am getting exhausted. And I don't think I can't imagine a world where I do this for 30 years or 40 years until I can, kind of retire. And what really unfortunate too is if I went on vacation or something like that month, my income would be lower. And I didn't really like that. If I got sick, I didn't really have those plans. My income would drop. So I was looking at ways that I could turn those sales into consistent income. How can I take my larger commission checks that I'm getting and turn it into something that pays me over and over again? And so that brought me into the realm of investing and ownership. Now, because I was in real estate sales, real estate ownership as an investment kind of made more sense. But what really made the most sense to me is when you're a sales professional, there's not a ton of investing strategies for you specifically in terms of the public market and typical financial advice. They don't really take into account variable income. So that kind of cash flow every month or
Yeah.
quarter is really important to you, that distribution. They don't take into account how your income responds to downturns in the economy. So when your income drops because the economy is going down, you don't want your investments going down too. And real estate is one of those things that historically have performed well during recessions or downturns. It doesn't
Hmm.
take into account your tax position. A lot of times, real estate professionals or sales professionals are taxed like crazy, or their commissions are withheld a lot. So a lot of them weren't tax advantaged. So I was looking for these ways to convert my income into real wealth, and real estate solved all those problems. And it gave me a path to retire within just a few years of investing, which is not something you ever really hear of anybody doing in the public market. So now that's what I do a lot. I help other sales professionals specifically contribute to funds that can help them retire within 10 years, with that being the ultimate goal. And I've loved it. I mean, that's what I do now, more on the ownership and the investor side. And I've been doing that for quite a few years now. And that's what I really love.
Awesome. Well, I appreciate that. Yeah, I think the thing that a lot of real estate brokers, agents miss, they're
Mm-hmm.
so busy selling real estate they forget to own it.
Yeah.
Right? And so
Yeah.
kudos to you for recognizing that, and very cool. So that's basically kind of your target
Mhm.
audience, is people like that were in your position, and
Yeah.
converting that earned income into investment income, into
Yeah.
passive income.
And there's no resource out there for salespeople. If you look up, investing for doctors or physicians or chiropractors, engineers, you get tons of groups and forums and Facebook groups and companies. You get a ton of that. If you look up investing for a sales professional, even though our income is different and we do have high income, the only things you really get are like sales courses, which is
Yeah.
great. The investment in yourself will always have the highest return. But once you have that money, now what do you do? How do
Yeah.
you position this money so that every time you make an investment, you buy back a little bit of your time? Every investment you make, you reduce your dependency on your normal earned income until eventually you can replace it. Like I said, within about 10 years was my goal. So, really putting an emphasis on now that I'm making great money, what do I do with it?
Yeah. Yeah, that's great. So talk a little bit more then about that and how you help people do that. What kind of
Yeah.
you obviously you're taking their earned income,
Hmm.
their capital, and then you're investing it for them. So
Yeah.
talk about how that works and what you guys do, and the types
Mhm.
of things that you're investing in. Help
Yeah.
people do
So
that.
what we do is called syndication. And that can really be broken down as there's a group out there that'll do all the work in a real estate investment, typically a commercial investment, larger property, apartment buildings, self storage facilities, big funds, anything there that's a little bit larger. And a syndication means, hey, you as the investor bring the down payment and the working capital on the deal, and we do all the work. And when the deal is said and done, you as the investor actually get most of the profits. So what we do is we create larger funds. So a lot of times what people don't understand is you can invest in bigger commercial properties as a retail investor, but you get the best terms when you have large investments, right? So where these big institutional operators and these big family offices and hedge funds get these phenomenal deals is because they're putting down a couple $1 million into an investment. They're going to get preferred terms.
Yeah.
So what we do is we pool together our investors. And you as an individual may not be able to invest $1 million yourself, but us and our group of investors can. So we're able to take that big, let's say $1 to $5 million investment, go to these large institutions and say, hey, we want a seat at the table now too because we're bringing a significant investment.
Yep.
And through that, our investors get unique access to deals that are very exclusive, and they get terms that you can only really unlock with this massive scale of investment that most people can't make individually on their own, or at least don't want to.
Yeah.
So we really pull those people together and then give access to deals and give preferred terms. And through those things, typically in commercial real estate, we've been able to get returns that project to let most people retire within 10 years through cash flow, which has been really awesome.
That's awesome. Yeah, and so your barrier to entry to these bigger deals, these better
Mhm.
returns, is
It's
you've got
high.
it's a high barrier to entry, and as an individual, you have to earn a lot of money, or be born into wealth or something like that. A lot of time
Mhm.
to get involved in these deals, unless you're, you know, it's the power of working together and joining forces with other people,
Yeah.
both other investors and operators, where you can now have access to these deals that you couldn't before. So
Yeah.
it's
And
really
it's
fun.
access to unique returns and unique tax benefits.
Yeah,
So,
I was gonna touch on the tax side of it too, because as a real estate professional, and I think that you mentioned earlier that that was part of what had you looking at it too, was the cash flow, but the tax side of it too, right? So
yeah.
you get access. We're not tax professionals, by the way,
Yeah.
but yeah, as a real estate professional, you have certain tax benefits that others don't, and so if
Yeah.
you are a real estate broker, sales broker, things like that, and you're making, there's depreciation benefits, things like that that
Mhm.
you can take that others
Yep.
may not be able to. So
Yeah, and even if you're not, you still get take advantage of a lot of these tax benefits, right? So a lot of people, whether you love them or hate them, you hear these headlines of, "Oh, Donald Trump is he's a this billionaire. He pays $0 in taxes. How is he getting away with this?" Well, he's not getting away with anything. He
Right.
just is utilizing and leveraging legal tax codes.
Yes.
And those are the same benefits that we offer to our investors. Because again, Donald Trump is that billionaire. He has access to these types of deals. He has access to the money to make these types of investments. Now, you as an individual may not have access to these deals or the money needed to leverage your way in, but us as a group, we do. So
Yep.
it really is a big way for you to have a seat at the table as part of a larger entity and get to play a bigger game that people have been playing for generations. It's just now more available to that retail investor.
Yeah. And what's actually great is that they're continuing, which is, not to get political or too much, but, uh, it's pretty common of the government to kind of continue to stifle things, right?
Yeah.
And they've actually, in recent years, kind of been going the other direction as far as making some of these things more available. And I
Mm-hmm.
know not to get too much in the weeds on that, but they continue to do that with like, kind of trying to open up where so there's accredited investors versus non-accredited investors,
Yeah.
and so they're like exploring and started to look at implementing ways to
Mm-hmm.
even change that a little bit more, where people, if you're not an accredited investor, if you don't currently have a certain amount of net worth or income, you still might be able to fit in that category with certain
Yeah.
education requirements and things like that. So it's pretty cool.
Yeah. And I love that. I couldn't agree more because there are actually real income barriers to this. It's one of the only
Yeah,
industries that you actually have an income barrier. You're allowed to essentially not discriminate, it's kind of harsh, but tell people, hey, if you don't make a certain income, you can't participate,
yeah,
which I think this country has never really enjoyed doing. And we don't really like that. So I'm glad. I think it's a little bit late, but I'm glad they're exploring some of those options for people now.
yeah, yeah. It's yeah. More to come on that. I don't know all of the nuances on that, but I know they've been working on things like that.
Yeah.
So awesome. So you're mainly you're doing commercial real estate then, different
Mhm.
assets. I don't know if there's something specific, like a certain type of asset class
Yeah.
that you're mainly focused on. Maybe talk about that, and maybe some markets, if you're willing to talk about like where you invest typically, if you
Yeah.
have certain
Absolutely.
markets you love and why you love those markets.
Of course. So we've been multifamily people throughout the entirety of our company. So apartment buildings is what we like. Typically something at least 50 units or more. Our smallest is 40. Our largest right now is 144. But that's what we kind of manage and operate. What we do now with the fund model that we've created, and we've done that all in the Midwest. We love, Kansas City areas, Missouri, Oklahoma areas. And what we are able to do now with the different fund model that we run is we can actually partner with other people throughout the country and throughout different asset classes. Now, one thing that's really important is it's hard to be an expert in everything. Many people, the best ones, are in their specific market, in their specific asset class. And what we were not able to do with our investors is give them the diversity that we feel that everybody should have. So what we do now is we will go to other groups and maybe they specialize in Phoenix or maybe they're in Washington or Dallas and they do self storage, or this group does luxury rentals versus low income housing. There's so many niches out there that we can't be experts in all of them, but we want our investors to have the diversity and the access to all of them. So now we're more location agnostic because we have partnerships, but we'll be able to say, hey, our partner in this deal has been in Michigan for 25 years and they know this market. So they're the experts, so they're filling that criteria. So we've opened up the location because of that, because of different partnerships we've had, and even the asset class. But right now we do a lot of multifamily, a lot of apartments. I think through this next year, you'll see a lot of self storage and a lot of low income housing coming from opportunities that we like. And there was a ton of data about oil and gas that we're interested in too. There's some opportunities for some enormous returns in the oil and gas fields and the energy fields that we haven't dove into yet, but there's a lot of people going that way because of some really strong data we're seeing there.
Cool. Awesome. So have your kind of foundation in multifamily, but continuing to
Mm-hmm.
expand and explore options. That's great. Yeah. And that's
Yeah,
a great way to go about leaning on experts, leaning on other people in other markets. It's really hard to kind of, and I see this with people that are like getting into real estate and they're so like, well, whatever works, I'm going to do it, right? They kind of are unfocused. Like, what are you looking for? What kind of investing are you doing? Just whatever deal comes along. Okay, so
Yeah.
basically, you're not doing anything, right? So you have to build that foundation. Like, it's fine to be multifaceted. I think that's great because it adds
Mhm.
diversity, and it's interesting to be involved in different things. But you got to have that base first to build off of, and then
Yeah.
okay, we've got this solid. We know what we're doing here. Now let's expand these to
Yeah.
these other markets, these other asset classes, things like that. Yep.
Yeah, and then it becomes who, not how. Once you have a pretty basic understanding of the investing field in general, we can open up and say, hey, I'm comfortable partnering with somebody else on a self-storage deal, even though I've never managed a self-storage deal, but I've managed multifamily, and kind of the business mechanics are relatively similar. Now, there's other nuances that I wouldn't invest in somebody who's brand new in that space, but I'm confident that our experience in real estate right now, we can get most of the way there, and with a great partner, we can get all the way there and really offer those to our investors because we invest too. So when you invest with us, you're investing in a deal that we're likely investing in. We want the diversity, so we want to open that up to our investors as well.
Yeah. Awesome. Sharing the wealth, right?
Yeah,
So, yep.
that's the
And
goal.
buy in on your own end in your own deals. That's always
Mhm.
good. So, yep.
Yeah,
Awesome. Well, let's talk a little bit about maybe both. I'm gonna put this question into one. So, as you are
yeah,
making your transition, and you can answer two different because it's going to be two different answers. But as you are making your transition from W two, or more, I guess you're W two, and then you're independent contractor, right? Working for
yeah.
yourself, and then into this investor, business owner, asset manager role. Talk about maybe some challenges that you had to work through, whether
Mhm.
that's mindset, whether that's logistically. I'll let you answer that however you want,
Yeah.
and then add on to that maybe challenges that you're seeing right now in your business that you're trying to
Mhm.
work through. And again, maybe logistically, maybe market. I'll let you take that wherever you
Yeah.
want. So
Yeah. So, when you're switching over into running your own shop, whatever kind of business that is, what's really great about having that W 2 is you typically have a very defined role and you have a lot of direction and you have a good amount of either teamwork or supervision. But then when you go to start your own shop, you may not realize all the little nuances that just go like there's so much work in just managing and running a business that's not even the business that you wanted to start. You see this so many times in certain industries where they open up let's say a bakery because they love to bake, and they go, oh my god, baking is like less than half of this. I got to market, I got to do taxes, I got to do my books, I got to like customer management, I got to manage employees and hire and fire. There is so much other things out there. Loving what you're doing day to day is a great first step to creating a business, but just realize that just because you love that thing doesn't mean that you should just go open the business and do that thing. I had
absolutely,
yeah, I had
absolutely,
a little bit of a bridge by going to the independent contractor route. So yes, I was self-employed, but I wasn't opening my own business. I didn't have leases. It was like a little bit of a gap of a bridge from W two to kind of independent contractor, and then to running my own business. So you have to realize it's okay if you don't want to run your own business. It's okay if you love what you do, and just realize that if you love what you do, you may not have a business where that's what you're doing day in and day out. Actually, in the best businesses, it probably is not what you're doing because they call that working in the business and not on the business.
yeah.
Right? So you're kind of stifling that growth.
I feel
So,
like that's a really a big misconception from
mhm,
maybe past advice. The whole follow your passion thing, and it's not
yeah,
that you can't, and it's not that you shouldn't enjoy your work. But to your point, if you love baking or if you love, you know, I don't know, art or whatever, like, doesn't
yeah,
mean that that's necessarily the business you're building, and it may be if you can figure out a way to do it, but it also may
yeah,
not be. And I feel like I think it's Gary Vee that I've heard him say that a couple of times, where I don't listen to a lot of his stuff, but I feel like I've
mhm,
heard him say a couple of times basically that, you know, in his colorful language that he always uses, that like, following your passion is not really the right, like, you should do your passion, but
mhm,
that shouldn't be your business. You should
yeah,
build your business and then your business can fuel your passion. And I'm
yeah,
not saying how he said it, but that's essentially his point.
yeah. And that's a great way to think of it. And again, I'm not ever telling anybody not to follow happiness, but maybe starting that business may not be happiness to you. Maybe it is doing what you do. And that's part of the reason why I love what our firm does is because a lot of people, they want to invest in real estate. They know it's good for them and they know it's a phenomenal investment, but they don't want to and should not go and be real estate investors. Maybe you're a phenomenal salesperson and you're just crushing it. You're making a ton of money. Don't take even 1 hour away from what you're good at. Outsource that to somebody else. We will manage those properties better and we will get you better returns, and it's stronger, and everybody gets to stay in their lane and do what they do really, really well.
Yeah.
So yeah, I don't think you need to have all these hats. Just wear your hat very, very well, and then you can kind of outsource the rest. Which is why, a lot of people, I think, they do get in trouble because they open a business. Again, they're a baker, they love baking. They realize baking is, a small part of owning a bakery.
Right.
And so that's just the word of caution to it. And then actually, I don't remember what your second question was. What were
Yeah,
you?
yeah, yeah. So before we go, yeah, so I think again, I think that just to reiterate, I mean, um, I think people when they follow that passion, again to your point, they don't think about all the nuances that go
Yeah.
with the business. So just kind of remembering, looking at that big picture and understanding that before you dive in, and then
Mhm.
um, you just there's so much more to it and than just the passion aspect of it. And no one's telling you what to do. I mean, you mentioned that earlier, right? If you're not self-driven, if it is challenging to get up in the morning, even if you are a driven person, and know what it is. And that comes from clarity too, but
Mhm.
knowing what it is you have to do that day and directing
Yeah.
yourself to do it. It's a lot harder than I think people realize until they start doing it. When you go to a job and you have a defined role and someone's telling you what needs to be done, you just do what you're supposed to do.
Yeah.
Now you're the one figuring that out every day, right? So
Yeah.
yeah. So the second question was challenges, any challenges that you may be facing now? Like, and again, that could be challenges in the market.
Mhm. Yeah.
I know people as they're scaling their business, sometimes there's challenges they see there. Just logistically, there may be something just so however you want to answer that. But we're always facing, I think, challenges to some degree that we got to overcome.
Yeah, I think one of the challenges right now is actually an interesting one because everybody in our industry is facing it, and it's much harder to raise money for investments now than it was, a couple year or 2 years ago. And it should be the opposite. People should be so excited to invest right now because market corrections are coming. There's a ton of distressed debt coming due in the next about 12 months in the commercial real estate space. So investors tend to have this mindset of riding these waves. And when the waves are really high, that's when a lot of people are excited. They're buying in.
Mm-hmm.
But it's the opposite, right? You're supposed to buy low and sell high, but when things are climbing,
Right.
climbing, and going high, a lot of people are excited, and it keeps kind of that cycle going. But people should be excited to get investing now, and it's harder to get people to realize that as opposed to a year or 2 years ago when everybody was throwing their money at you. They wanted to
Yeah.
get these deals. Now people are more hesitant when it should be the opposite. They should be extremely gung ho, really ready to go out because this is going to be some of the best buying times we're going to see in the commercial real estate space, maybe for our generation or this decade. So I think that's a big part of it is the education of taking that person who's maybe that sales professional or maybe outside of the investing world and letting them know, like, hey, no, this is the time that you were asking me about, last year, 2 years ago, 5 years ago. That time is here. You shouldn't be hesitating. So
Yep. I
I
just looked
think,
up a quote because I couldn't remember it. So I knew it was Warren Buffett, but he said, "Be fearful when others are greedy, and greedy when others are fearful." Right.
yeah,
So when everybody's making money, um, that's when people are greedy because it's like, oh man, everybody else is making money. Let's jump
yeah,
in. And then now everybody's starting to have that more of that fear in the market, and what's going to happen. And now it's the time to I don't know
now is the
I don't know
time.
if greedy is the right word, but
It's okay. We can be
opportunity,
greedy.
opportunity. Yeah,
Yeah,
right.
I think we can be greedy. I don't think there's anything wrong with saying that. You're looking for these opportunities, and they're coming. They're here,
Yeah,
and you got to be ready for them.
yeah,
So don't be hesitant. And to us, it's more frustrating in the financial industry because it's like you're almost telling people like, no, no, this is what you've been asking about. This is what everybody's been asking for. This market correction. You shouldn't be pulling back right now. You should be going forward. And
doubling
we are.
down. Yeah,
Yeah.
and I totally agree with that, and I feel that way as a broker as well. Like this
Hmm.
is things have slowed down. Granted, I'm always hesitant with you look at year over year net sales numbers and all that. And it's like yeah, well last
Yeah.
year was like insane, so it's not really a good
Yeah.
measure. But the truth is that there people are going to start dropping out of the industry. I mean,
Hmm.
the next few years.
Yep.
And so, and a lot of that is going to be self-inflicted. It's going to be
Hmm.
mindset. It's going to be, maybe you weren't doing the things in your business that you just were riding that wave. And so you didn't really have to figure out how to run a business, or you're pulling back, right? Oh shoot, I'm not making as much money. I've got to pull back on my marketing. No,
Mhm.
no, that's the opposite of what you should be doing. As people are dropping out, you should be doubling down on that and becoming, taking their piece of the pie if they're going to give it up, right?
Yep.
And so that's kind of the same kind of concept. And
Exactly.
yeah, and so let's touch on the market. So you kind of, because we kind of went there with that, with the answer to your question. I totally agree. If you don't know, so residential and commercial are very different.
Mhm.
And I would say this even within the same asset class. There's no such thing as the real estate market, right? What
Yeah.
what market are you in? What neighborhood are you in? What asset class are you in? It's all gonna react differently. So um, we're not talking about residential right now. I'll just set that aside because it could react very differently.
Mhm.
Just there's different factors, right? Everybody's got to have a place to live. There's inventory things. There's all sorts.
Mhm.
There's affordability in a different way. And we're looking at incomes and that sort of thing versus investor returns and things like that. Although you're also looking at incomes with rents and that sort of thing, but
Correct.
but
Yeah.
still different factors in the residential world. But you touched on it earlier, so um, there was a lot of cheap debt for a long time.
Mhm.
So people were getting in, and loans are not the same in the commercial
Yeah.
space. You've got balloon payments, you've got adjustable rates,
Mhm.
you've got a lot of bridge loans out there, a lot of things that are short term in it, whether that's amortized long term, but you still have a balloon payment due, and you gotta do something, or you just got a short term bridge loan to maybe do a repositioning. There's a lot of people that have these really low interest rates that they're not going to be able to keep, and they've got to figure something out. So let's
Yeah.
talk about that a little bit, what you see there.
Yeah. So there's distress coming in the commercial space. There's about $1.2 trillion of debt coming due over the next 24 months. And 50% of that was bought with variable rate loans, meaning when they purchased these properties, 2 years ago, and their rate was 2%, 3%, that same property now, your rate could be as high as 7% more.
Right. Yep.
And there's so much that happens when your rate shoots up that fast. Not just rates, but insurance has gone up and taxes have gone up. So right away, it doesn't matter what you do or what market you're in. Those are three of your non-controllables, really: your taxes, your insurance, and then your interest rate. So half of the properties are purchased with variable rate debt, and there's about 2,500 properties which Yardi has seen that have a debt service coverage ratio below one, meaning
Yeah.
if your debt service coverage ratio is below one, you don't make your debt payments.
Not only that, a lot of lenders do audits, right?
Mm-hmm.
So if you're in one debt service coverage ratio is not typically
Yeah,
good enough.
yeah. And so what these banks are going to do is you can't pay your mortgage, and if you want to refinance it, when you go to refinance, the way the commercial banks do it is they look at the income and the expenses, and they determine what loan they're going to refinance you into. Right? Refinance is just another loan. So when you go to do that, what people are getting hit with is, man, because your net income is so much lower than it was a couple of years ago, because the rates are higher, insurance is higher, taxes are higher, occupancy is lower. A lot of people now, all that COVID money is gone, so they're kind of rooming up with each other. Vacancies are higher. You see rents cooling down in certain markets, which is actually good. That's healthy for those markets. They
Yeah.
cannot grow like that. They're going to say, yeah, we'll refinance you, but you've got to bring a lot more money to the table. This property is either not worth what it was a couple of years ago, or we're not willing to give you this big of a loan on it because your income is different.
Yep.
So they call that, needing capital to
Hmm.
close.
Yep.
So the option are either
Yeah. So
put
instead of
more
doing a
money.
cash out refinance, which is probably the plan, or
Yeah.
or at least like refinancing, a lot
Mhm.
of people were doing that, like basically the BRRRR strategy with apartment
Yeah.
buildings, right? Well,
Well,
now
now
you
you're
can't. Now
you're
you're
cash
bringing
in
money to the
refinance.
table.
Mhm.
What's that?
I say you're a cash in refinance at this
Yeah.
point. They
Exactly.
won't
Yeah.
let you
Yeah.
pull money out.
Not
Um,
really the plan. Yeah.
Yeah, and you have to come to the table with money. And a lot of people don't want to do that, or they cannot do that, or their investors don't want to do that, or cannot do that, which is understandable. So the option is to sell it.
Yep.
Well, there is not a single operator, group, or bank that has more money this year to buy real estate than they did last year or the year before. Not a single one. In that same study, you already did private institutions, venture capital, Public banks, private banks, local banks, and regional banks have all pulled back their cash allocation to real estate. So you have properties that can't make their payments. You have properties that can't be refinanced without significant additional capital put in the deal. And you have significantly less money chasing these deals.
Yeah.
But when you have less money chasing these deals and you have more people selling their deals, that's called a buyer's market
Yeah.
where I'm from.
What's that? Yeah.
Yeah, which we haven't seen really. And we could talk about residential in a minute, but in the commercial space, that's called a buyer's market in any space.
Yeah.
So those markets are here. So if you are part of that investment group who can allocate more capital to real estate, who is pushing more into this asset class, you are going to come out ahead
Yeah.
just by market fundamentals.
Yeah.
So
Absolutely.
there's great opportunities coming up, and we're really excited, especially over this next year or so.
Yeah, awesome. Yeah, yeah. I think I mean, that's just the tip of the iceberg, I think, but that's
Mhm.
a big piece of it. And for a couple of years, like if this would have happened a couple of years ago, well, it's hard to say for sure, but rents were climbing so fast in a lot of
Yeah.
markets where it's like, well, our rate's higher, but you know, we can absorb it with rents.
Mhm.
Well, you just mentioned rents are declining
Mhm.
in a lot of markets, and part of that is because they raised, they went up so quickly. It just was like
Yeah.
it was not sustainable, and so people are getting into these deals with really cheap debt and with a lot of speculation on rents, and they're gonna I would hope that no one's putting pro forma numbers with 20-25% annual rent increases, but even if you're being conservative, I know people were using numbers that were higher than what's
Mhm.
what's typical, and so now you're in this space, and so some people might hear, well, distressed sellers and all, you're taking advantage of somebody. Well, I mean, number one, they did it to themselves to
Mhm.
some degree, right? To some
Yeah.
degree, there's a lot of people that just were not as careful as they should have been. Number
Sure.
two, they're going to need a solution. I mean, the bottom line is they're going to have to do something, and you're providing a solution, and someone has to be there to buy that asset. And
Yeah.
so it may not work out well for their investors, unfortunately, but that's not on you.
Mhm.
Um, it's better than it being foreclosed on and then getting nothing, right? So
Correct.
yeah, so
Absolutely.
you just gotta, again, I just think sometimes people hear that and they're like, "Oh, you're taking advantage of somebody else's situation." And like, well, not really. I mean, they're
Yeah.
professional
I
too,
don't.
and
Yeah, I don't think so. I mean, people love to buy things on discount. If you go to Kohl's and there's furniture on sale, you say, "Oh, well, I'm taking advantage of
I know,
the
I know. It's
manufacturer."
so
No,
funny
you're
though. But
not.
when you're talking, yeah, when they're talking about investors, though, it's different somehow, right? It's like, yeah, I want to go to the car dealership and get the best deal I can, or I want to go, when I buy my house, I want to get the best deal I can. But then if an investor tries to do it, it's like
Yeah.
for whatever reason,
Yep.
like taking advantage of someone. So
Exactly.
yeah, yeah. No, I always talk about providing solutions and all that stuff, and
Mhm.
that's kind of the perspective I come with. And yeah, it's maybe they're in an unfortunate situation, but something's got to happen to that asset, and there's tenants behind that asset, that asset too, that need to be continue to have housing and service and all that stuff too. So
Yep.
um, awesome. Well, that's great. Yeah, I think there's going to be a lot of opportunity here in the near future as well,
Mhm.
just for a lot of those reasons. So okay, so kind of closing question here. What advice? I'm going to ask it again, a two-part question here. So, what
Mhm.
advice would you give someone who started out kind of in the same place that you started out, and they're like looking at options for investing? What piece of advice? What maybe next steps should they take? And then,
Yeah.
what advice would you give to someone just that maybe has some capital and they're looking for options, but they're not really sure how to
Yeah.
get involved in real estate?
Real estate, man. That's the option. That's what you got. I'm a big real estate guy. So if somebody's there and they're, they maybe want to invest, they're looking at different options. They don't know what to do, or they want to get into real estate in some capacity. So let's do the first one. Do you want to get into real estate right now? Maybe you got a W-2, or maybe you're in sales or whatever you do. The first question you have to answer for yourself is, do I want to be active or do I want to be passive? If you want to be passive, that's fantastic, but don't do active sports. Don't go to buy houses yourself. Don't look for acquisitions. Don't look to do burrs or rehabs. All those things are very, very active. Yes, there's less work involved when you own rentals than maybe another full-time job, but there's also not much money in it unless you have this really big scale and you really run it like a business.
Yeah,
So if you want to buy yourself a second job, that's fine. But if you want to be a passive investor, which most people say they do, look for those passive strategies, syndications, funds, and real estate investment trusts, where you give money to sophisticated full-time operators. They do all the work and you are the passive investor. So answer those two questions. If you want to be active, that's great. Dive into that field. If you want to be passive, that's great. Dive into those strategies. If you have some capital and you're looking to make investments, there's a couple things you would do. You want to look at your goals and look at how much money you have. I think one thing that people don't really realize, they go into real estate or they think of real estate, they think of, cash flow, rental payments coming in. That's what I want. I want cash flow. Well, that's fine, but for that cash flow to be significant to your life, you need a lot of investable cash. If you're going to get a 6 or 7% cash on cash return and you've got 50 grand to invest, okay, you're getting a couple $100 a month. That's not really life changing. You
Right.
might want to look at, what do I need to do to build this pot of cash until I can eventually put it into cash flowing deals and then retire from that. So that's what I talk about in we have a retire within 10 bundle, where we go through a calculator and we really talk about the strategies of, hey, when should you build equity versus when should you look for cash flow? For most people, they have to go through a phase of building equity versus converting to cash flow. If you want to learn more about that, I have a resource for you and your listeners. Go to retirewithin10bundle.com. I'm going to give you a retire within 10 calculator. You put in some basic information about you. It'll show you how fast you can retire through cash flow in years. Most people at that 5 to 7 year mark, depending on how aggressive they want to be. The second is the definitive guide for investing for sales professionals. So we're just going to walk through some of the pain points we talked about. What are some of the best investments for you? How to protect your investments. And then the third, I actually have a bonus gift for them. So this is a tool that if you were to join a $20,000 to $30,000 investing mastermind, this will be one of the first things you get. This whole package will be the first thing you get, but this is a really big one. It's going to help you mitigate risk in your investments and really track and analyze your investments going forward. It's going to save you a ton of time. So again, retire within 10, and the 10 is the number. So 10bundle.com. Get all that stuff. It's totally free. But really just understand those things and where you are, and it can really expedite how fast you can really retire from cash flow, which is what most people are looking for.
Awesome. Yeah, that's great. I'm going to jump on and get those just because I think those are all great
Yeah.
resources. So that's great. Yeah, I mean, having a plan is key, right?
Mm-hmm.
And knowing, where are you now? What do you have to work with? And then actually having a strategy and a plan. And so many people start out, hey, I want to get involved in real estate, and they just kind of, buy something, and they don't really
Yeah.
think it through, right? Which, maybe better than not buying anything, but it works a whole lot better if you plan it
Yeah.
out and get through.
Yeah.
So that's
I
great.
agree.
Awesome. So other than that, if someone wanted to reach out to you about, just to chat or connect, or talk about maybe what you have working for deals right now, how they might be able to invest with you guys and what you're doing, what's the best way for them to do that?
Yeah, I'm most active on LinkedIn. So you can search up my name, Justin Moore, or the President's Club Investor, and I'll pop up. Same for like Instagram, or if you go to presidentsclubinvestors.com, that's our website. You can see some forms from me. You can book calls with me, or get my contact info there. But those will be the best places. Social media is a great one. LinkedIn, I'm the most active on. Justin Moore or President's Club Investor, and you'll find me.
Awesome. Justin, I appreciate you being on the show. Thanks for sharing about your journey and what you're doing now, and talking about the market and the opportunities that are coming up, and all that stuff. So I really appreciate you being on the show.
Yeah, thanks so much, man. This has been great. Hopefully the listeners enjoy it.
Awesome. Thank you.